My name is Andrew Stotts, and I want to welcome you to another student presentation of the Valuation Masterclass Bootcamp. Today, we're going to get a presentation from Tanawat, one of our students, on the company Chevron. Do you own Chevron? Are you thinking about buying it? Are you thinking about selling it? Now is the time to learn more. Let me bring him in here. Hold on. Tanawat, how are you?
I'm great.
You ready to rock?
Yeah, always.
Yeah, I know you are. I'm excited to see what you got to say about Chevron. Let me just bring the PowerPoint in here for a second.
Yeah.
All right, I think we're there. You want to just go down and up once just to make sure. Also, you should press that hide at the bottom where it says,
Okay.
yep, and then go to the front page. Great. You are at the front page. So I think it's time. The time has come. It's
Yeah.
time to rock this show, and I'm going to leave you now, and then you just start, okay? I'm leaving
Okay.
now.
Okay. Thank you, Andrew. Hi, my name is Thanabatro Pandesha. Today I will do an investment analysis on Chevron. I initiate coverage on Chevron with a buy recommendation based on the target price of 194 US dollars, implying an upside of 33.5%. I derive a target price from a DCF-based valuations using a WACC of 9.2% and a terminal growth rate of 2%. Let's go to the highlights. Chevron stays committed to oil and gas with big bets on 53 billion acquisition deal. The second one is Chevron Texas move signals defiance of green policies. And lastly, fossil fuel growth can amidst the changing energy landscapes. Let's start it. Now let's talk about the company background. Chevron Corporation is an American petroleum corporation that went public on the New York Stock Exchange in 1921. Chevron is the third largest oil and gas company with a global market cap of 4%. It engaged in all phases of petroleum operations, exploration, production, and refining to market and research. Chevron revenue is reported to be 195 billion US dollars in 2024. This revenue comes from downstream and upstreams. Now let's talk about the stories. I analyzed that Chevron revenue could grow by 15% in 2025 if the company closes a 53 billion acquisition deal with Hess Corporation, which could bring growth in resources, increase in cash flow, and upgrades its portfolio, such as 30% ownership in the Starborough block in Guyana, which produce more than 11 billion barrels of oil, and Hess Bakken, which have 465,000 net acres of high-quality inventory to Chevron. According to Chevron, it recently increased its production in the Gulf of Mexico, producing the world's lowest carbon intensity oil and gas. All of this, I can conclude that Chevron still sees itself as remaining committed to its core business in oil and gas. Next thing is Chevron planned to relocate its headquarters to Texas from California before the end of 2024 to get more favorable regulations, potentially reduce costs, and produce a job for more than 7,000 employees. This may be a stance on defying green policies and highlights that there could be many companies arguing that energy transitions cannot be rushed without severe economic consequences. I analyzed that within 2028, the relocation would be complete and Chevron would gain more profitability. And lastly, a promising development in the energy transition is the rise of blue hydrogen. According to Globe's Newswires, blue hydrogen market size was valued at 20 billion US dollars in 2023 and expected to reach 65 billion in 2033. Blue hydrogen presents a great opportunities for oil and gas to stay relevant in the clean energy future. Now let's talk about the industry analysis. Global oil and gas industry is a major player in the global economy with a current market cap of 7 trillion US dollars. Saudi Aramco leads with a 25% market share. And this industry is dominated by major companies like ExxonMobil, Chevron, Shell, and PetroChina. According to King's research, the oil and gas industry is projected to grow at a 3.7% CAGR from 2024 to 2031. And since 2019, Global refinery capacity decreased by 4.5 million barrels per day due to the COVID-19 pandemic and the UN mandates to cut emission by 45% by 2030. McKinsey also reports that the demand for hydrogen and biofuels could increase to 44% from 2022 to 2027, adapting to the expected decline in fossil fuel demand after potentially reaching its peak in 2030 at 493 million terajoules. You can see in the right side corner. But at the same time, fossil fuel could remain significant because of the rising market in hybrid cars. Hybrid cars is projected to grow from 291 billion in 2024 to 504 billion US dollars in 2032. But according to Morgan Stanley's, sales of hybrid grew 5 times faster than EVs. Despite the shift toward greener energy, the oil and gas industry still have room for growth due to continued demand for hybrids, which rely on gasoline. Next, I will talk about the quarterly report. In the first quarter of 2024, Chevron experienced a slight revenue decrease, but pushed back in 2024 second quarter. The company saw a 1.5% year-on-year decrease in gross margin and a 3.8% year-on-year decrease in net margin. Now I will talk about the latest news of Chevron. Chevron acquisition of Hess Corporation are set to be settled within 2025. The second one is oil consumption has increased this year to the same level as before the COVID-19 pandemic. And the third one is Chevron increased their production in the Gulf of Mexico. And lastly, Chevron is set to move its headquarters from California to Texas within 5 years. Now we'll talk about the consensus estimate. Over 64% of analysts hold a buy view on Chevron, and 16 have issued buy recommendation. The mean target price indicates a potential 20.6% upside. Consensus also predicts an increase in revenue growth from almost negative 70% in 2023 to about 2% in 2024, a huge increase from negative 17 to 2%. Now, let's talk about the revenue structure. Most of Chevron Corporation revenue is from downstream, with a 151 billion in 2023, which equivalent to 74% of all its revenue, followed by upstream revenue with 46 billion, or equivalent to 26%. The major operating areas of Chevron's are 66% international and 34% USA. And also, sales and other operating revenues have decreased from 235 billion in 2022 to 197 billion in 2023, which mainly resulted from the lower commodity prices. Now, let's talk about the interesting one, the FVMR method. The FVMR method, you can see it's fundamental, valuation, momentum, and risk. But I will talk only the two main points on this page. On the overall, Chevron appears to be a bit above peers average relative to 1,810 non-financial companies in the USA. On the valuation side, it is in top tier due to the lower multiples in every aspect in the last 12 months except for price to earnings. But on the momentum side, it is almost worse due to a decline in revenue growth rate. But I analyzed that the real reason is it is compared to a non-cyclical company too, not just the cyclical company like Chevron. Thinking about compared to 1,810 company. And all of that is not cyclical, it's non-cyclical too. Now let's go to the world-class benchmark. I will talk about only three main things. On the profitability growth, it consistently improved to 4th place in the past 12 months, ranking in the middle tier among 300 large energy companies. On the asset efficiency, has been stable at 5th place since 2022. On the revenue growth, has seen a slight improvement from 2020 to 7th place recently. Now let's talk about the profit and loss statement. You all can see that on the revenue side in 2025, there are a huge increase of $30 billion. Due to, I think, of the acquisition of Hess Corporations and the combined revenue after the acquisition of Hess Corporations. As you can see on the net profit, it gradually increased over time from 22 billion to 25 billion in 2028. Now let's talk about the balance sheet assets. You can see that the net fixed asset increased immensely on the 2034 of 170 billion US dollars to 220 billion US dollars. That is a huge increase of around 40 or 50 billion dollars. It is due to, after the acquisition of Hess corporations, there will be combine of assets, and actually the Chevron will also have its own investment plan in the future too. Now let's talk about the cash flow statement. You can see that I predict that in the dividend paid, it will stay stable at $10 billion. And then sometimes it can grow up to 11, sometimes it will drop to 9.5 billion. I think it's stable at the time. On the ratio, you can see that on the current ratio, it's almost stable from 1.3, 1.4, around that. And on the EBIT margin, there have been a slightly increase and decrease over time. But on the forecast, you can see it's gradually decreased a bit over time. Now let's talk about the ratios. As I say on the revenue, you can see on 2025, I forecast that there will be 15% increase from 2024 due to the acquisition of Hess corporations and combined revenue. Now let's talk to a big place, a main things to focus on this valuations, the free cash flow data. You can see on the depreciation and amortizations, it's gradually increase over time, but not so that much. On the capex, it's due to that, I say, the acquisition of Hess corporations and more investment, but it is still the same as I told you in the last page. Now let's focus on the free cash flow to the firm. It's improved from 20 billion in 2024 to 2028 of 23 billion. Now let's move on to the valuation sides. I'll talk about the relative valuations first. On the forward 2035 PB multiples, Chevron looks the same compared to the energy sector in the USA and Asia. I forecast its return on equity to be around 13.5% in 2025, lower than the sector average in the USA and the world, but still higher than Asia sector average. This indicates that Chevron is trading at a premium and appeared overvalued relative to its anticipated return on equity. Now, on the PE to growth, it has appeared to be trading slightly below the average for the USA and Asia, with a PE ratio of 11.2. This suggests Chevron is fairly valued compared to these regions. However, when looking at the EPS growth of 6.3% in 2025, it is below the USA and the world, but higher than Asia. This indicates that Chevron is trading at a relative modest valuations. Now let's talk about the assumptions I use. I assume a risk-free rate of 3%, market equity risk premium of 9%, beta is set at 0.9, which leading to a cost of equity of 10.7%. Chevron capital structure is estimated to have around 17.7% debt to equity, with a WACC at 9.2%. Given Chevron's significant capex and potential to issue and repay debt, I've used a free cash flow to the firm valuations method and give an equity value per share of 194 US dollars, implying a 33.5% upside. Now, next I will talk about the sensitivity analysis next page. I'll talk about if the optimistic side, the gross margin changed by 31.8%, the valuations will be 205.7 US dollars per share. But on the pessimistic side, if it gone down to 27.8%, it goes down to 181.4 US dollars per share. Now let's talk about the risk. If the transitions away from fossil fuels accelerated more rapidly than anticipated, Chevron could expose to risk related to future global policy shift toward renewable energy. And the second thing is, if Hess Corporation's integration falters, the acquisition may fail to deliver its full intended benefits, such as growth in resource and increase in cash flow. And lastly, incidents such as oil spills and gas leaks can quickly go viral and may lead to divestment, making it crucial for Chevron to maintain a positive image to secure capital and sustain shareholder support. Now I will sorry. Now I will conclude my valuations. Chevron is a strong buy due to a historical low PE ratio. Chevron current PE ratio is 11.2, a significant 57% decrease compared to its 10-year average of 26, and a dramatic decrease from 2019, which is 77.75. This steep decline in valuations positions Chevron at a highly attractive for investors seeking an undervalued energy stocks. Thank you, everyone.
Excellent. Okay, so let's go through some questions. We've got some questions that have come in, but I think I'm going to have to ask the hardest question.
Oh, okay.
The question is, let's think about if I want exposure in oil and gas right now, I have an option. I can buy different companies, or I could buy a oil and gas or energy ETF. Now that energy ETF has probably been going down for a while because oil price and other factors. So what do I get if I decide instead to allocate my money to Chevron versus just the overall oil and gas market? In other words, the share price has come down a lot, but it's probably come down for the rest of the industry. What is it that Chevron gives me as an investor that's going to be different from just the overall industry?
I would say Chevron, after acquisition of Hess corporations, maybe it's there. After I do some research, I think the CEO of Hess corporations and Chevron is very great, and they are very focused on their plans and the synergies to the investors. And actually, like, if you compare to the global view that's focusing on the ESG, the Chevron itself investing more to ESG more than other competitors, which the price maybe of the other energy company maybe can decrease due to the like public, that because the public sometimes see that this company doesn't invest any in the ESG or any in like try to make the world better. So I think the Chevron is very great at its price, and look at the price, look at the graph. It's almost go up to 186 and then come down to around 145. Now I valuations it to be 194, and I think it's a good price to see as a target.
Okay.
As you can see that if you say that, why not all of the company, right? Why not all of the sector? Why not invest in all of the sector? Because I think there is some competition, and there can be some like political, some of the policies that some of the company doesn't change it. As you can see, the Chevron is quickly try to move from that policy and go to, like, as you can see, they try to move the headquarters to Texas already from California.
Yeah, that's an interesting one. So we've gotten some questions about Hess, such as one question from Pushpa says, don't you think the acquisition looks unlikely as the amount of the acquisition is around 25% of total revenue? And even if it happens, how are they going to raise capital? So maybe you can first just give us a background of where things stand. And then after that, maybe, take us through it.
After a lot of research, I found out that the acquisition of Hess corporations, I think it's sometimes they will use the shares to buy the Chevron, because I know that the John Hess, the CEO of Hess corporations, said in the live interview that he are willing to move on with this deal because he wants to be with Chevron. He wants to own Chevron shares. That is what he said. And I think that it is likable to acquisition, because if there is nothing there is nothing that they have no cash, but actually they have. They can use the loans. They can offer more bonds. Yeah, that's my answer.
Okay. Another question we got was, how does Chevron handle the shift towards trend from fossil fuel to renewable? Is there any change in revenue portion of Chevron? And I would add, is there any risk to their stance, of the way that they're going, for instance, going to Texas and the like?
I would say there are risks before they didn't change anything, because like on the California policies are very strict, and they have to pay high taxes for energy company that's trying to work on oil and gas. And when they try to relocate its headquarters to Texas, a lot of the taxes goes down in the future too if they go there.
Mm. So how does it feel to graduate from the Valuation Masterclass Bootcamp?
Feel very great. It is very intense, and I learned a lot from here, like immensely. I would say immensely. I've never learned something this much before.
Isn't it great to learn something like this? It's so interesting, and you dig deeper and you learn more. And I mean, when I first found the job of being an analyst, I mean, I love it just as much as I love it today.
Yeah, I would say that I love it. I still love it how the coursework go through. They try to assign some assignment and let us research and then put everything up from the scratch. That's very promising. Think about if I want to be an equity research or even investment bank in the future. This is very useful.
Yeah, you've got all the foundational skills there. What's been interesting is when we first started the boot camp, we just kind of dumped assignments and then we just hoped that the assignments would turn out good. But we realized, like, we want to expose step by step what the process is, and it can be a little bit frustrating because you get to Feedback Friday and the feedback's strong and you haven't improved, but you haven't come up. Students send me messages like, I can't figure out how to come up with a story, and then I just tell them, just wait. But that process of revealing it and exposing what you're going through, it has its pros and cons, but I think generally it's a good one.
Yeah, actually, I love the feedback Friday. I love it very much because like on the first week, actually, again, if you remember, like all of the teams get get the get the feedback, like if you should improve this, you should do this. I think a lot of teams, and include myself, when I heard what you talk about other groups and even my team, I think it can improve a lot if you we get feedback from you or moment. I think it's very good. Think about in the real life, there's nothing no people will feedback you like this.
Mm.
This
Yeah,
is
it's hard to
yeah.
get that.
Yes.
It's interesting. You know how Feedback Friday came about? We've only been doing it for about 5 boot camps now. And it came about because we had a large number of students. And one of the complaints that students said is that they wanted more personal feedback. And I thought to myself, I can't scale the Valuation Masterclass Bootcamp if I've got to give personal feedback for every person. And that's when I came up with Feedback Friday. Let's just have a public, discussion of where people are, and then everybody can learn from that. And then they're looking at their own work, and then they're seeing it and they're thinking, okay, I know what I got to fix now. So Feedback Friday has turned out to be a really great addition to the boot camp.
Yeah. Very great.
Well, great job, and I look forward to you bringing your energy to Valuation Masterclass Bootcamp number 18 students. I know that they're gonna see what you've done, and also hopefully you can be bringing them a lot of positive energy, and my goal is just to make the boot camp better and better. In fact, I just received an interesting book in the mail. You want to see this book? It's
Yeah.
about quality as an organizational strategy. In other words, could you just say our goal is to improve quality, and that is how we're going to differentiate ourselves, not by our marketing, not by our innovation. The title of this book, I was just showing, quality as an organizational strategy. That's really, this is written by some people in the business community that I know. And so I heard about it. And so I'm looking forward to it. But that's what we're trying to do with the boot camp.
Yeah. And lastly, can I say something?
Yeah.
I would like to thank you, Andrew Stotts, a lot. And I would like to thank you, Moment, my team, Prudence, Pruk, and everyone. Like, it's been an incredible journey. It's 6 weeks, this intense 6 weeks is of sleepless hours. I would like to thank you, all of you. Thank
Yeah,
you.
well, on behalf of everyone, and I know on behalf of Prudence, who's not able to be with us right now, but she's watching, and she was a great team leader for you guys. So,
Yeah.
and I know Moment appreciates that too. So I'm going to take you out for a second, and then we'll come back. So hold on.
Yeah. Thank
Well, that was amazing. A great presentation on Chevron. And if you want to build a competitive advantage in company valuation, join us in Valuation Masterclass Bootcamp number 18. It's going to be even better than the current bootcamp. My name is Andrew Stotts.